Hello, hello, and hello. Let me make sure my video is working here. My mic is on and my volume is up. All right, so we are ready to go. Hello, this is Helen Thomas and the CDFM study group. Today I will begin and complete review of CDFM Module 2, Competency 3, Strategic Planning and Organizational Performance Management. So this is basically once you receive the resources that you need, the funds, the personnel, how do you then take care of them and enhance your operation? So business process is looking at your current processes and look for ways in which you can improve to maximize the resources that you have. So this particular section of the CDFM is accounts for 17.1% of the exam. So not as much as the fiscal law, which we'll do next week, which is 34.9%. And the first couple of weeks, we did 33.6%, which is the defense business, defense budget process. I got to get these terms together. All right. So, but it's still important enough for you to understand. So this will involve like your internal controls, your auditing, and process improvement. How do you improve what you have so that you can get more bang for your dollars, for your buck? All right, so let us begin on page 235. 2018 National Defense Business Operations Plan. That particular paragraph has a couple of things I wanted to point out. So remember, the big op order is the national security strategy that we get from the National Security Council. The agencies such as Department of Defense take that big op order and then they develop their individual agency op order, which is for us the National Defense Strategy. And so the business operations plan is looking for ways to improve and enhance what we have, our operations, while meeting our national defense strategy. And the national defense strategy is meeting the national security strategy. All right. Sometimes it's good to laugh at yourself. All right. So what's the primary focus of the national defense business operations plan? The main purpose of this plan is to reform the Department of Defense. Reforming, even though other things may be a result of it, is to reform. So it also says, so that's one thing. And then the second thing it says, so number two is the business operations plan replace the department's strategic plan. So that's something important to know. So business operation plan equals department's strategic plan, in case you see those two words interchangeably. So what the plan is a roadmap, a guide into how to reform the organization and also improve processes. So it has three goals: to rebuild the military readiness. We want to make sure our military is prepared and ready to go. Strengthen our alliance with our partners, and reform the current department's business practices. Excuse me. At the very bottom, it also tells you again and reminds you everything that the Department of Defense does is done to link what the department's strategy is that links to the big op order or the national security strategy. So remember, it's not stated in this section, but in previous sections, we talked about the 3 DoD support systems. What are they? JCITS, PPBE, and the Defense Acquisition System. How do they work together? So once the National Defense Strategy and all its policy guidance is submitted and sent down, then you have to determine what else is needed. So let's say we have a capability gap. How do we know that? In the Joint Requirements Oversight Council, they conduct the JCITS process, Joint Capabilities Integration and Development System. The chairman of the JROC is the vice chairman of the Joint Chief of Staff. What they do is they look at what the strategy is, what it is that they're supposed to do, and then they look at the capabilities that we already have in-house and determine what is the capability gap. Do we have all the capabilities to meet that strategy? No, says the JROC. So then we need to determine what's the gap in between them. They look at the MLPF, that's the acronym, doctrine, organization, training, material, leader development, facilities, all of that stuff. They look at each one of those areas to determine where the capability gap lies. If the capability gap is anything other than material, it triggers the PPBE system. That's the second system. So you have several DoD secretariats that are in charge of the PPBE process. Planning is the responsibility of the USD for policy, Under Secretary of Defense for policy. Programming is the responsibility of the DCAPE, Director of Cost Assessment and Program Evaluation. The DCAPE is also responsible for updating the analysis of the alternative guidance. They update the future year defense program. What else? The PAR that we talked about last week, they also, which is like your cost analysis that the DCAPE is responsible for. Your USD Comptroller is in charge of the budgeting phase of P. When the JSIS is done and the JROC submits an initial capabilities document, it lists, okay, this is the capability gap. This is our recommended solution. If the recommended solution of the .MLPF is a material solution, that triggers the third system, which is the Defense Acquisition System. The Undersecretary of Defense for Acquisition and Sustainment is responsible for the Defense Acquisition System. And so I'm just recapping, even though it's not in this section, when you take this exam, you're not going to see the information directly the way it is written in the book. You have to be able to put all the parts and the pieces together to tell the story, which is what I was trying to do at that point. So going back to page 238. So when we're trying to improve an organization, then we need to put a team together. Sometimes some of you made black belt in Lean Six Sigma. We're going to talk about those on the next page. Is putting an efficiency group together to determine what are ways we can improve operation. So again, remember the goal of the business plan is to reform, to change, to improve, to enhance. So on page 8, when you put a team together, what they're telling you is your team should be no more than 10 personnel, 10 individuals or less. Also, what you want to know is anytime, whether it's CDFM or any class, whenever you do a class and they start talking about team development and team conflict, is whenever you put a team together, you need to think of these 4 words: form, storm, norm, perform, or forming, storming, norming, and performing. Because every team goes through these phases when you put a group of people together. Forming is when the teams agree on the goals. Storming, once they have their goals on what they have to accomplish, then the group starts to sort themselves. What capability do you have? What are your skills? What are you able to do? And they start figuring out who can do what. Norming is when disagreements and personality clashes are resolved and a spirit of cooperation emerges. And finally, once they get everything distributed, everybody's good to go with the rules, then performing stage is where the group focuses on achieving the goal. Now, when you see this again, most likely than not, it will not be, hey, this is the word, this is the definition. It may be, hey, you just started a new job. You just arrived at the new organization. Which stage of team development are you in? Okay, well, you're probably in the forming. You're just getting there. You all just agreed on what you're going to get paid, what hours, leave you're going to get, and so forth. Forming, storming. You put the group together. Everybody kind of knows, once you know what the goals are, you put the group together. Storming, because people start, if you're the new person in the group, then they're going to want to know, okay, what are your skills? Are you good with Excel? Are you good with formulas? Okay, maybe you'll be the person that keeps track of that. So make sure you know the 4 stages of team development and how to differentiate what stage you're in. Because every class I've taken on team development, these 4 topics is in there. So I'm sure you'll see it again. So on page 239, it goes into Lean Six Sigma. So we're going to look at the definition. So Six Sigma is a quality control method that is used to reduce inefficiencies. You want to look to see if you have any repetitive actions that you can reduce, any defect in your production processes. Six Sigma. The Lean Six Sigma is a combination of several successful methods that is used to reduce fraud, waste, reduce waste, defects, and general mistakes. So if you have a process where people normally make mistakes, you identify how to fix it. You have another process, how to improve your efficiency. When you put all the 6 Sigmas together, that is called Lean Six Sigma. So you hear it quite often. So let's look at the bottom of page 239. So a combination of the 2 program is currently used by many organizations, as we know. There are 5 steps to the actual Six Sigma process. You define the problem, measure. How do you measure? Then once you know how to measure it, then you're going to analyze, you're going to improve the process, and you put controls in place to ensure if something deviates, how do you get it back on point to ensure improvement in your performance. So those are your steps in Six Sigma. Six Sigma steps. I prefer paper. Some people can do their study on just online. Benchmarking. What does benchmark mean? For anything that you do, you need to know, where do you place in the scheme of things in your operations? Benchmarking is taking a world class, the best in class, another organization that is considered to be the standard of operation, and you kind of gauge yourself off of how they're operating. So I think that's what I get from this. So they have several steps, which is 10 steps to benchmarking. So it's basically just guidelines, objectives that you use to ensure that, okay, this is the best in class. How do I get to be the best and exceed the best? Benchmarking. That's a term you need to know. On page 2311, it mentions a GPRA, which is important, Government Performance and Results Act of 1993. Provided a foundation for a few things. So in the first bullet says, improve the confidence of the American people in the capability of the federal government by holding federal agencies accountable. So accountability for achieving program. We got a standard we have to meet. Initiate performance. So I'm not going to read all of them. Let's see. Help punishment is improve internal control. So all the focus was not just we just give you resources, is we need to have measures in place to ensure that you're utilizing those resources in the most efficient manner. So that was 93. Then in 2010, on page 12, the GPRA Modernization Act expanded the original purpose. So they used technology, apply the latest technology and lessons learned. So make sure you read through what was in the original and then pick out some of the important things that were added. So let's go back to strategic plan 2313. We talked about the business operations plan, and then they mentioned a strategic plan. The GPRA Modernization Act requires agencies to prepare a strategic plan. And what was the strategic plan that we studied when we first started? That's that National Business Operations Plan. It replaced the department's strategic plan. So let me put business. So I'm linking my data together, business ops plan from the first page. All right, let's read. And the GPRA Modernization Act requires agency to prepare a strategic plan, make it available, and notify the president and Congress it's available. Not later than the first Monday in February of any year following the year in which the term of the president commences. So president comes in, and then the following year, your strategic plan is due. So the agency submits a strategic plan the second year of a presidential term. What does it do? Provides long-term objectives. What's the focus? What's the priorities? Strategic plan must include the following specific points at the bottom of page 13. Mission statement. Telling exactly what it is that you understand, easy to read. Mission statement, what it is that you're supposed to do. Strategic goals, what are you trying to accomplish strategically? Performance goals and federal priority goals, depending on those if it applies. On to page 2314. Also in the GPRA Modernization Act of 2010, there's a requirement for annual performance plan. So think of this as you request resources, you go to Congress and you battle, and then Congress approves certain amount of dollars. At the back end, then the agencies have to then submit a performance plan based on what you requested, based on what we actually gave you. You want to explain what you actually spent it on, your performance plan. So it requires, the GPRA requires agencies to establish these goals. Performance, they must be measurable, quantifiable, and meet the objective. So I'm looking at the first two bullets, and then you can read through the other two. Basis for comparing to keep that trend so you can analyze trend over time. Your annual performance plan. So what's your plan? Well, how do you plan to spend the money, basically? And then at the back end, once you start spending the money, there's a timeline to report the performance reports, to report on how you're actually performing. So the annual performance report provides information on the agency's progress achieving those goals. The goals you set in the plan, how are you performing? So when does the report, or when is the report required? So the annual performance report means the same as performance section of the performance and accountability. So the PAR report that the agencies must submit in November, or the annual performance that is published in February. So we have November and February, your annual performance report, which is part of the PAR, annual performance report, is part of the PAR, performance accountability report, is due November and February. Some others, the second bullet on page 2315, the GPRA Modernization Act requires the head of the agency not less than 150 days after the end of the fiscal year to make available the website an annual performance update that compares actual performance achieved to the agency's performance goals for that fiscal year. So after the fiscal year ends, you have 150 days to report on performance. On the bottom of page 16 is also important. The DOD's alternative. So the DOD does not submit a performance and accountability report, the PAR. So rather than submitting a consolidated PAR, the DOD submits a separate report. So the DOD agency financial report includes its annual statement of assurance and its financial statement. So they submit the AFR, and when it's submitted to OMB and Congress by 15 November. So 15 November, the annual financial report is submitted. Then the other one, the annual performance report, is submitted to OMB and Congress by 15 February. Remember that November and February? So this is kind of now zooming in into that same information that was sent, along with annual congressional, your J-books, your justification material. So the APR, annual performance report, is posted to the OSD website at that time. All right, so that's the DOD. Instead of submitting one big PAR report, they submit in November, they submit the financial report with the annual statement of assurance and the financial statements. And then again in February, mid-February, the annual performance report. The ERP systems we use on page 17 is addressed at the top. Why do we use it? You have to establish standards for enterprise system, connectivity. You want to make sure this initiative is developing a common structure. So when we speak of one language, one word, we all understand the common message, the common abbreviations and so forth in that system. If a person is on GFIBS, and everybody on GFIBS will speak the same language. So enterprise resource planning systems, the ERP systems. At the bottom of page 17, 2317, table 231, you have several terms and definition and description. Make sure you review each one of those, especially people typically get confused with output measures versus outcome measures. So the outcome is the qualitative activity when compared to its purpose. The outcome is based on what you were supposed to do. The outcome is what actually happened. Versus an output is a quantifiable, a tangible item that is the result of your action. That makes sense. So outcome versus output, but also review the other ones. Page 2318. All right, so there are other than appropriated funds, there are also miscellaneous sources of funds that an installation can get funding from. In most instances, you cannot take in funding if you're not authorized to keep it above what you're appropriated, above what you are authorized. So these, what we're going to look at are several additional resources that an installation has to provide funding to run that installation. It says in the page 18, in that first paragraph, following are examples of specific laws that allows the organization to retain and keep those miscellaneous funds. Unless you have the legal authority to keep the funds, if you can't keep the funds legally because you don't have the statutory authority, those funds must be returned to the miscellaneous receipts account in the Treasury. It's listed there. So for instance, agriculture and grazing. Under Title 10, individuals can get permit to operate on Fort Bragg and on Fort Liberty or wherever you're at. So examples, I like to look at the examples to make it tie in. Administrative expenses. So the cost for us to operate on, like, let's say whatever city you're in and the government has to rent a space, or somebody has to rent a space from a government entity, then to cover administrative costs, you could charge them a lease. to finance, to improve, and so forth. And the example given is wildlife. Let's say on your installation, you have a wildlife habitat area, erosion control. So that funding that is that's collected for agriculture and grazing will be used to sustain those types of operation, to maintain that habitat, that wildlife area. Recycling on page 19 is a big one for most installations. Proceeds from the sale of recycling at an installation should be credited to funds available for operations and maintenance at that installation. You don't mix it with your appropriated funds, but it is controlled as such. But if you read down, I think at the very end of that paragraph, if the balance available to a military installation under this section at the end of the fiscal year is more than $10 million, the amount of the excess, $10 million and $1, 11 million, that other million, the excess should be sent or deposited, covered into the miscellaneous receipts in the treasury. So actually all installations have the statutory authority to conduct a recycling program. If they make funding above 10 million, the excess amount has to be deposited into the miscellaneous receipt. You have sale and outlease if you're selling land. I don't have any highlights there. Page 20, fish and wildlife. If you go fishing on an installation, you often have to pay a fee. That fee kind of works like the working capital fund. If you remember how we talked about that in previous sessions, where the customers charge a fee, and then whatever you pay, that funding is used to continue that operation. So installation that have that fish and wildlife program, they have established fees for things like hunting, fishing, trapping permits. You get your permit in a particular area, you can hunt, and then you got to pay that fee when you get your permit. Fees collected at installation. So I'm reading on the fish and wildlife, the second paragraph, last sentence. Fees collected at installation being closed by BRAC, that's that base realignment, they're closing that installation, may be transferred to any other installation and used for the same purpose. Page 21, changing defense business practices. Wait, is that it? Yeah, this is a short section. All right, DoD's resource processes and resource arrangements continue to evolve to provide flexibility during the year of execution. The PPBE process provides the flexibility to establish high priority funds or new funds during the OMB passback or the OMB joint fall review for negotiations. So I'm just reading the paragraph, the last paragraph on page 21. Then the last paragraph talks about flexibility, providing us that flexibility in the year of execution, because most of the requests that we submit is 12 to 24 months ahead of time. So when you're in the year of execution and things happen, things change, then you need that flexibility. So the DoD Financial Management Certification Program supports development of the workforce to bring increased analytical capabilities. So if anyone says, why do you need a CDFM? So I can develop more analytical skills and I can be considered a professional, right? Financial manager. I'm not just a financial manager, I'm a professional because I'm certified, and will help leverage the investments in these financial systems and are being made. Critically important, the training and financial systems together support the financial audit process we'll make over the next few years. All right, so auditability. So if nothing else you get out of his building the team, less than 10 members, form, storm, norm, perform, understand the stages they go through, and know, depending on where you are in a scenario, whether everybody is working towards the goal, no issues, am I in the norming or we're actually now performing to meet that goal. Miscellaneous sources of funds: agriculture and grazing, recycling, sale and outlease, fish and wildlife conservation programs, energy savings at military installations are the additional ways in which an installation can earn funding. And anything above the statutory amount must be returned to the miscellaneous receipts account in the Treasury. All right. So finally, we are on page 22, 2322. It touches briefly on commercial activity. Either the government is responsible for a job or it's privatized. So let's look at the definition. Outsourcing: the government entity retains full responsibility, versus privatization, where that private commercial organization or contractor is responsible. The perfect example I could think of from outsourcing, excuse me, a few years ago on the installations, the government used to be in charge of military housing on each installation. So even though they outsourced it and they had different entities working on the installation, the government still retained full responsibility. Versus a few years ago now, they moved to the privatization process, where that private company is now fully responsible for that mission of military housing. Anything they do or don't do is not on the government, is on that particular company. So as part of the POM each year, military departments consider opportunities to pursue outsourcing, insourcing, or privatization, and to achieve efficiencies. That's the goal of this whole section, is enhancement, reforming, improve efficiency effectively. Make sure we don't have any duplication of the same process to get the same result. Which one is more efficient? All right. So that looks like we are at the end of CDFM Module 2, Competency 3, Strategic Planning and Organizational Performance Management. Next week, we will cover CDFM Module 3, Competency 1, Fiscal Law, to include any other fiscal law I pulled out of Module 1 and Module 2. So I'm trying to do an all-inclusive fiscal law next week, because the majority of your questions on your Module 2 exam comes from this section. So I need to be able to articulate that to you. All right, if we don't have any questions, and I don't see any hands up or any question at this particular point. So if you're viewing this video at a later date and you have questions, please leave a comment on our YouTube page so that I can get back with you. If I need more additional information, I may tell you to send me an email directly. I'll do my research, try to find the answer for you. I will not give you an answer if I don't know what that answer is correctly. I'm not going to give you an answer then. All right, please be sure to subscribe to our YouTube page if you have not done so already, so that YouTube will advertise. If somebody puts in Google and they look for CDFM support, CDFM study material, then our videos automatically will pop up, because we have the traffic, because people are actually clicking, they're typing comments, they're clicking on likes, they're looking at the videos and so forth. All right, that's all I have for today. This is Helen Thomas on the CDFM study group. I'll see you guys again next time. Thank you for stopping by.